Are you looking to buy a commercial property using your super? How do you even do it? What LVR limits can you look at? And how is the serviceability calculated? Stay tuned to learn more. So you're looking to buy a commercial property with your SMSF. What LVR can we look at? Now this will be determined by a number of factors. Generally, the amount of deposit you currently hold, the type of asset that you're acquiring, the area that that asset is located, whether it's metro, whether it's regional, whether it's specialised, childcare centre, petrol station, etc. And also be determined by serviceability. Now, generally speaking, for a commercial property in a metro area, we can generally consider up to 80% of the property's value as an LVR. Now, when we're looking at serviceability for these particular types of facilities, we're looking at the contributions coming in to the super fund. We're looking at the net rent from the property, generally 80% of what you'd receive. And then we're looking at the DSCR. So you may remember, if you've watched previous videos, when we spoke about the full documentation and the non-bank lease doc serviceability, that we spoke about debt service coverage ratio, the DSCR. The DSCR on the self-managed super fund is normally calculated over a 359 or 360 month term. It's normally 1 to 2% added to the interest rate. We're looking at contributions as well as net rental income. We look at the tax and any negative gearing benefits that might be able to be applied within the superannuation. And then that gives us the net serviceability ratio, which will tell us, can the income from the fund sensitise, so only using certain amounts of income and rent, cover the repayments on the commercial property. Now, there are many different lenders when it comes to SMSF and commercial property. They all have different methods of verification. For example, if you're self-employed, some lenders may want full tax returns for the last 2 years and they'll look at your actual contributions. Some will want you to declare how much you'd be willing to contribute and provide evidence such as BAS statements or an accountant's letter that you make enough money to actually make those contributions. So there are a lot of different options and a lot of flexibility when it comes to those types of loans. If you are PAYG and an employee, with different lenders, we can also declare future concessional contributions and future non-concessional contributions without the need of an accountant's letter. And what that essentially means is that if we're looking at the serviceability for you to buy a commercial property or residential property for that matter, if the serviceability is a little bit too tight, if you're willing to put additional money each year into your superannuation fund, once you receive advice from an accountant or financial planner, we can put that information into the servicing calculator and then boost up the amount that you're able to borrow. Now, commercial property and super can sometimes have an offset account attached with one of our lenders, but generally, depending on which lender we go with, may not have an offset. When we're looking at fees for commercial SMSF, SMSF is a little bit of a different structure, and therefore we're using some different lenders. Generally, non-banks play in the SMSF space, and their fee and rate structure is a little bit different to your standard kind of residential property purchase. Most lenders will charge an application fee, which is normally a percentage. Some don't, but the majority do. It's also very important to be mindful that when we're looking to leave that lender, that some lenders also charge early exit fees. Now, some lenders allow us to avoid that early exit fee by paying a bit more of an establishment fee up front. Other lenders, if we leave within 3 to 5 years, may charge us a fee on the exit. So it's very important that when we're entering into one of these commercial SMSF contracts, that we understand exactly what we're signing and what the terms of the loan are. Now, when we're buying a property through self-managed super, you will be required to get independent legal advice. And that's where a solicitor of your choosing will talk you through the loan contract and everything you need to be aware of before you're able to sign the loan contract. So there is an extra step there of due diligence before we move on and proceed with the settlement of the property. But commercial SMSF can be a very effective way to use capital that you want to allocate to real estate that's currently within your super to buy another property.